Okay, good morning, ladies and gentlemen, and thank you very much for joining us for our latest webinar. By way of a quick introduction, my name is Mark Rubinson, and I'm one of the partners at Aram Burling Gardner. For those of you who don't know, we're a mid-tier firm of chartered accountants, and we provide a full range of services, including audit, payroll, outsourced accounting, all types of tax, VAT, wealth planning, and that type of thing. Big shame again that we can't meet in person at our offices at 30 City Road, but very exciting. We intend getting back there very soon, and we've got a real life seminar booked for 16th June on property tax planning, when you'll actually be able to come to 30 City Road, physically be there, have our breakfasts, etc. Back to the good old days, so to speak. Today we are going to be talking about businesses working their way out of the pandemic, and we're joined by our very good friends from Excello Law. Before I start doing the proper introduction, though, I just want to do a quick plug for our next webinar, which is filling up very, very quickly. It's on 9th of July, and we're going to be joined by On Yavin, who is a very well-known name in the world of cryptocurrency. And he'll be telling us everything you ever wanted to know about cryptocurrency, blockchain, and all of the digital currencies that are out there. He owns Cointelligence, as well as an academy which teaches the fundamentals on digital currencies. And he'll be telling us the basics of crypto, how it's mined, how it's valued, how it's accounted for. We'll be talking about how it's taxed. So that'll be very, very interesting. So please enroll as quickly as possible. Let's move on. So today we will be talking about how businesses will be working their way out of the pandemic, including how they'll be opening up, trading in the post-COVID landscape, and encouraging their workforces back to their offices. Lots of cover in 45 minutes. Our speakers are Nelu and Vanessa from Excello Law, and our very own Victor Dorp, who is our ABG's tax partner. Also joined by David Glass, who has a long-standing relationship with ABG, and David is also part of Excello Law. Nello is an employment lawyer specialising in working with UK and global businesses. She works with companies in lots of sectors, including professional services, manufacturing, education, travel and logistics. Vanessa is a corporate and commercial lawyer and business advisor with over 25 years experience, working with the businesses from startups through to multinationals. And Victor, I think most of you should know Victor. He's a highly respected tax professional and public speaker, works closely with business owners, high net worth individuals, and what Victor doesn't know about tax and VAT ain't worth knowing. So collectively, our speakers will talk about 45 minutes, and we will endeavour, and they will endeavour rather, to answer any questions that you can post online that I think I'll be reading out towards the end. Please deal with your feedback forms after the talk, and please reply with the feedback forms as soon as you can. I'll now hand over to David, who will briefly tell you about Excello Law, and then we'll pass the baton over to Nello. Over to you, David.
Hello, everybody. It's David Glass. First of all, I wanted to echo very much what Mark has said and say that I've known ABG for a long time, and I'm delighted that we at Excello Law are teaming up with ABG for the first time today. I'm also delighted to be able to welcome our guests from Excello Law, as well as, of course, to say hello to the guests from the ABG side. Just very briefly about Excello Law, we would describe ourselves as a new model law firm, bringing together a range of talents with a much looser, flexible structure than is conventional, which we believe works in clients' interests. Without further ado, I would like to hand you over to Nello, to be followed by Vanessa, and Nello will now talk on the employment aspects.
Slide one. Okay, thank you. Good morning, everyone, and thank you very much, David. Okay, can we move? Great, thank you. Right, so I've actually got quite a few slides. I'm not, because there are quite a few topics to cover, but clearly because of time, I'm not going to be able to do that. But don't worry, nobody's going to lose out, because you will get a full set of the slides at the end of today's session. So what I'm going to focus on are the three key issues that have sort of been cropping up for us, type of client inquiries that we're receiving, that have been receiving over the last few weeks, few months. Those are namely to do with what's known as hybrid working, COVID testing, i.e. can I as an employer insist that my employees take COVID tests? How do I do this? And what about how do we deal with carrying over at the annual leave that has tended to accrue now over the last holiday year? So starting off with hybrid working, what is it? It is a split between working in the workplace and from another remote location, namely, and in most cases, from somebody's home. Well, question mark, isn't that what we've been doing for the last year? Well, not really. What we have been doing is we've been predominantly working from home, those who have not been on site or in a workplace office. And that's really come about, I suppose, because of the first lockdown and the sort of emergency provisions that were put into place and people just working at home by way of default. Hybrid working is actually a sort of formal arrangement where there is the formalities are set into place and the structure is put into place as to how do we actually manage this split between office working and home working. Now, why has this become so topical? Because it seems to be the way that most companies are going to be going in the future, whether that's the short-term future or on a sort of medium or longer term. And the evidence that's sort of supporting that sort of goes to sort of 2 or 3 main surveys that I'm going to refer to. Slide 2. Next slide, sorry, Kay. Numbering seems to be out. Right, so 43 out of the 50 big UK employers, so that's over 1 million of their employees will not be returning back to the office come 21st of June. What they're actually going to be encouraged to do is this hybrid working arrangement, which is between working in the office and at home. One of the other surveys has suggested that half of employees between aged 18 and 24 actually want to return to the office in full capacity, compared to say just 29% of those who are over 55. And 1 in 4 people, British people who are saying that they want to return to work on a 4-day basis as the norm, even if that means accepting a pay cut. And what we're seeing in terms of the trend amongst our clients is that, say, come by 21st of June, what will happen is that, say, about 50% of staff will come back into this, will return in a hybrid fashion, and 50% will remain at home. And then by September, up to 75%, if not all staff, will be on some form of hybrid arrangement. So what are the practical things to consider? Well, the working at home that we've sort of evolved into and fallen into over the last year has really been as a reactive measure. And most of us don't have, our contracts of employment haven't been updated to take account of that. So you will need to consider actually amending the standard contracts of employment to set in place that now we are in a hybrid arrangement. The place of work will probably be the predominant place of work still, with the home working being the default. How many days are people expected to be in? What sort of hours are they working? What's happening with regard to having breaks? And then also what's happened with home working is that, for obvious reasons, employers haven't been able to do health and safety assessments, which there is a legal requirement to do about how do people work their workstations, etc. if you're in an office. You hear stories that people have been working from their kitchen tables and using their dining room chair, which is fine for a couple of weeks probably, but that isn't sort of appropriate over a longer term, over a longer period of time. So you will need to consider how are you actually going to conduct these health and safety assessments to make sure that people are properly equipped to be able to work from home. That's not just from a health and safety perspective, because what you want to do clearly is to minimize any sort of personal injury claims that might come your way in the future because people have got bad backs or repetitive stress injury type injuries just because they haven't been set up at home correctly. And also, how do you deal with things like supervision and training, particularly for new staff, about how do you onboard them? What about less experienced staff or junior staff? That seems to have been a real challenge over the lockdown period. So how do you address that when you've got this balance between working at home and in the office? And it may be that, say, during the early days and the probationary periods, they have to spend more time in the office so that they can actually adjust to that way of working and ensuring that they are onboarded and trained correctly. Next slide. So what are some of the benefits? Well, as we've seen from the surveys, this is going to be the way that if larger employers certainly going to be working, and no doubt other employers will follow suit very quickly, but there will be an expectation now amongst workers that they can work in a flexible hybrid way. And that's going to then, as we see the job market also starting to pick up, that's going to play a sort of place in terms of how you're going to be able to retain staff if you haven't considered these times of arrangements, and how are you going to recruit staff and then retain them when you're comparing yourself in your sector against, say, your competitors. So there is a potential benefit in terms of if you haven't considered this, then do consider it, even if you know, in the context of what are your competitors doing. Then drawbacks. Next slide, please. Right, so I think it's only during the period when we've not been in our normal workplace that we've sort of properly appreciated the social interaction that it actually gives us. And actually through that social interaction is that how we often develop culture within organizations, and that loss of control and loss of culture you know, has sort of been felt by many of us whilst we've had to work from home. There is a drawback from people not being in sort of a physical space together. There's also that tends to be a reduction in that sort of spontaneity and the collaboration that works, that sort of that, you know, the water cooler moment, or just popping into somebody's office, or going out for lunch together, or grabbing a coffee. Those opportunities are lost. And as I mentioned earlier, if you've got new staff or you've got junior staff, less experienced staff, the ability to actually give them the on-the-job training can be difficult, or it becomes hindered. Next slide. So what are some of the key questions that were being asked? Well, as an employer, am I obliged to actually implement a hybrid working pattern? The answer is no. Employees have the right to request to work flexibly. Now, that can be in this way, as I said earlier, part office, part home. And that request is predominantly available for, say, staff because they've got childcare arrangements, or they're caring for dependents, or someone with a disability. The right is to make a request. The right is not to grant the request. When you're looking at those types of employees, they're employees that are sort of within protected categories, then you need to consider those requests very carefully, and you need to give good business reasons and set those out very clearly in case you do refuse a request. So that's if you're an employer who's saying, actually, hybrid working is not for us, and you know, what am I going to do if staff just sort of come in and sort of in their droves and say we want to do it? Well, the bottom line is you don't have to actually consider those requests unless it is for those employees in certain categories. Now, but what if you are an employer that says, actually, you know what, let's try this out, we think it can work for us. But what happens if actually nobody wants to come into the office on a Monday? How are we going to sort this out? How are we going to manage this? Well, that's in your gift, essentially. It's your business. You need to manage it appropriately. And in terms of what is required in terms of commercial and operational needs. Again, with regard to employees with protected characteristics such as disability or childcare, who need more flexibility, then you've got to give sort of wider berth in terms of what you consider. But for everybody else, it really is about what is in the best needs, what's in the best interest of the business. And should you have a trial period? Well, absolutely, certainly. You know, just because we've been working from home for almost 15 months for most of us, doesn't mean that the hybrid operation will just naturally transition into that. You know, life is changing on many levels, including all sorts of social interaction or social activities, etc. So you've got to balance now how we actually, will it work for us in this way, even though we've managed to work from home for a period of time, can we actually make this work in the future on a different level? So it is absolutely fine to have a trial period. It could be for 3 months, 6 months, keep it under review, make it clear how you're actually going to measure that, how it's working or not, and what you're going to do at the end of the trial period. So just moving on to the next issue, which is, again, a common question that we're being asked, which is, can I insist on testing my staff and even visitors, guests, customers, clients as they enter our premises? Now, with regard to staff, the answer is no, not unless you have an express contractual right to do so. Now, some companies will have, say, drug or alcohol testing policies. You can't expand that to also include COVID testing. You would have to have a separate policy. And if you're actually thinking about having a policy, just think about very carefully why you need to implement a policy. Do you actually need, do you need to be temperature testing? Do you need to be insisting that staff have lateral flow tests or PCR tests at work or before they come into work? Now, it may be that actually, while staff are back in the office, you're not able to, say, socially distance as well as as you know, as is, you know, according to the government guidelines, and that might be a reasonable reason, but it might not be. So do think about it carefully, because there was quite a rush about 6 months ago saying, oh, we're going to start temperature testing, we're going to start COVID testing, and as we've been vaccinated and we've moved on, that there seems to be less of an appetite amongst organisations. But if it is something that is still within, you know, your consideration, do, as I said, consider very carefully why you're going to do it, because then there are the issues of, well, what are we going to, how are we going to test? How frequently are we going to test? What about staff that actually refuse to test? Even if we've got a, you know, compulsory policy, how are we going to deal with them? And what are you going to do with all this data that you're going to collate once you've tested? How are you going to store it? Who's going to manage it? Who's going to be the data controller for it? And how are you going to keep it updated and deleted? So you might end up with what starts off with being sort of, you know, something that's identified as a practical need becomes administratively very difficult and legally actually very difficult to manage, particularly on the context of data protection. So moving on to the last issue in terms of, again, we've had a sort of flurry of questions that have come in with this, which is what are we going to do with staff as they're coming off furlough and flexible furlough, and they've accrued all of this annual leave, which we didn't manage properly. Now, a lot of organisations did ask their staff to take annual leave whilst they were on furlough or flexible furlough, but it might be that not all of that annual leave was taken. So the starting position is that the government introduced sort of legislation last year, which was to say that employees could carry over annual leave that wasn't taken over this last year and this year into the two annual leave years that will follow. So if you have annual leave that the annual leave finishes on the 31st of March, say this year, then annual leave can be carried over and taken that's accrued up until that 31st of March, and the worker has the right until 31st of March 2023 to take that annual leave. What a lot of companies didn't appreciate, and it's absolutely understandable why, is because annual leave is actually quite complicated, because the starting position is that a worker who works 5 days or more has the right to 4 weeks annual leave. Now that translates typically into 20 days holiday. That's the working time directive. That's the minimum that a worker is entitled to. That was topped up many years ago by the UK government, so that employees actually have an additional 1.6 weeks. So going back to somebody who works 5 days or more, they actually have an entitlement to 28 days holiday. So that includes the bank holidays. But it's quite typical for employees to have more than that because they've got contractual holiday, and it might be that increases with, say, length of service. Now, the carryover provision only relates to the 20 days working time directive holidays. It doesn't apply to all the other holiday. However, a lot of employers didn't quite appreciate the nuances of that, as did we. You know, we didn't as employment lawyers. It was, you know, it was quite a difficult issue to grapple around between all the different types of leave. But the actual carryover provision only applies to the 20 days of the working time directive. Now, if that wasn't made clear to your staff at the beginning of the holiday year or through the holiday year so that staff could manage their holiday, and if that wasn't set out explicitly, then there is a real risk that staff will be allowed to carry over all of their holiday, including their contractual holiday that wasn't taken. Now, why is that becoming an issue? Well, as we're coming back into the office place, and as we're now become, you know, employers are starting to open up and staff are coming off furlough and flexible furlough, it's about how do we actually manage all this accrued annual leave that has piled up for all of our staff in terms of operationally. There's also another issue, which is that on termination, if you have staff leave, and we are seeing the job market begin to open, they will be entitled to receive a payment for all annual leave that is accrued. That includes the carryover and the annual leave that they've actually accrued in this holiday year. So you could find that you're sort of facing unexpected and quite sort of significant costs in terms of, especially if you're going to start to see that there's staff turnover around. So if you haven't dealt with these issues already, then, you know, it is time to deal with them pretty swiftly, because otherwise you could find yourself having to, you know, manage a holiday situation that was very unexpected for the business. So on that note, I'm just going to hand swiftly over to Vanessa. So thank you.
Well, thank you, Nello, and good morning, everyone. So I'm just going to do a very whistle-stop tour through some of the key issues that I've been dealing with surrounding COVID and Brexit, and then just end with a little bit on looking forward to how I think things will go in the future. So could I have the next slide, please, Kay? So I'm going to look within the COVID concept at the recovery loan scheme, because I'm imagining that, like most businesses, finance is a critical issue. And as you will have known, the CBILS and the bounce back loan schemes have now come to an end, and they've been replaced with the recovery loan scheme. And this is a good way of getting finance at this point in time. So I thought I'd focus on this within the COVID category. So what is the scheme? It covers term loans, overdrafts, invoice finance, and asset finance. And it can be used to manage cash flow, make investments, and for growth. So how much can you borrow under the scheme? Well, it's quite a big range. It ranges from £1,000 up to £10 million per business. The minimum amount for asset and invoice finance is £1,000, and the minimum for overdraft and term loans is just over £25,000. Now, if you're part of a business group, there is a maximum of £30 million for the group. Now, if you've already got a CBILS or bounce back loan, this is not a barrier to taking out a further recovery loan scheme, but it may be taken into account by the lender when deciding if and how much to lend under the new scheme. Next slide, please, Kay. Now, I've been doing quite a lot of applications under the CBILS scheme, and the recovery loan scheme is following a very similar pattern. One of the key tips that I can give you is to allow plenty of time if you're considering making an application, because there are high volumes of applicants, and also the banks are still working with short staff and from home. So everything is taking a really long time. So if you need finance quickly, you need to plan ahead if you're looking to get it from this scheme. I would also say that you should research the market, because the lenders can apply their own turnover thresholds. So there isn't a standard format for every bank that you might approach. And for this reason, it's worth considering using a broker who's familiar with the different approaches that lenders are taking and can help you find the best fit, because it's time consuming to make multiple applications. So you should be trying to find a good lender before you make that time commitment. Of course, you need to be ready, like with any application for finance, with management accounts, a business plan, historic accounts, and details of any business assets. This isn't like the bounce back loan scheme where you tick a few boxes, you put in your turnover and you get the money in your account in a couple of days' time. This is like a genuine, normal application, and it's being assessed in the same way. So for this reason, you do need to be very clear about the purpose of your loan, and you need to be aware that credit checks will be taken on both the business and its directors. So if there has been financial difficulty, you need to be able to explain that. Next slide, please, Kay. The terms of the scheme are that there are no personal guarantees for loans under £250,000, which for a lot of people provides a lot of comfort. And even above that level, private residences are excluded from guarantees, and there's a cap of 20% after business assets are used. So for directors having to guarantee loans, this is a good and safer way of doing so. The maximum interest rate that can be applied is 14.99%, which may seem very high, but in some cases I've seen loans on outside of the scheme on higher levels than that in recent months. So it's not a terrible rate if it does go up as high as that. You need to be aware that there's no interest-free period, and you're going to need to start paying interest immediately, unlike under the other schemes. And the period that you can have these loans for is 3 months to 6 years for asset finance. And for invoice finance and overdrafts, it's anything from 3 months up to 3 years. Next slide, please. So what are the alternatives within the range of government and other COVID-related finance available at the moment. Well, if you've already got a CBILS or a bounce back loan, you should have been approached by your bank to let you know that you are entitled to extend the term from 6 years to 10 years. And this will reduce monthly interest payments in the short term. And of course, you can repay at any time without penalty. So if you do need some help immediately, this is worth considering, because you can always pay it down quickly once you're back into profits. If you're in one of the sectors that qualifies for a government grant, like pubs, clubs, salons, restaurants, etc., then there are some restart grants for up to £18,000. And for non-essential retail businesses, there's a government grant of up to £6,000 for the same reason of getting back up and running again. And alongside these, it's worth having a look to see whether there are any sector-specific or regional grants that might be available to you. There are a lot of local authority grants and indeed charity funding available for businesses. Next slide, please. So that's COVID in this whistle-stop tour. And I'm moving on now to Brexit. And I thought I would start with the thorny issue of imports and exports and the whole zero tariff custom duty regime. So if you are buying and selling goods in and out of the EU, you will have been aware that you've got to now start looking at the rules of origin. The zero tariff custom only applies if you can demonstrate that the origin is within the EU. So what you need to do is to classify the goods firstly by commodity code, which sounds as though it should be easy, but there are quite a number of categories where it's difficult to know which one you fall into. So you may need to get guidance on that. The second step is to really understand your supply chain and to understand where the parts and materials are originating from, and if there are any components that are non-originating within the EU. The third step is obtaining proof, and that might be from your suppliers, getting statements from them, or you may even have sufficient knowledge yourselves to be able to justify the origin position you're taking. Now, because this has been so tricky, there has been a fund set up called the SME Brexit Support Fund to provide up to £2,000 for SMEs to get support and training and professional advice. So I do suggest that you take that up, and I'm sure that Victor will be talking more about this when he comes on to his section. Next slide, please. The next issue within my Brexit section I just wanted to touch upon is data protection. As you know, when we were within Europe, there was a free flow of data between the UK and the EU. Now that we've had Brexit, we've got a sort of interregnum period where that free flow has been allowed to continue until the 30th of June, and this is called the adequacy bridge. And what's happening in that period of time is that the EU are considering whether or not the legislation that we have in the UK regarding data protection is sufficient, and that they'll be happy to allow that free flow to continue on the basis of the legislation we have in place. Now, that decision is due at the end of this month, but there's a possibility that the bridge will end before an adequacy decision is actually reached. And therefore, if you are trading internationally and you are sending data into the EU on receiving data from the EU, then you need to consider putting relevant clauses into contracts to safeguard that data in the absence of a clear position legally. And if you are targeting EEA nationals where you're going to be holding data relating to them, then you really need to be thinking about appointing an EU representative who can liaise on your behalf with all the EU authorities that will be relevant to monitoring and controlling how that data is used and stored. Next slide, please. And then my final issue on the Brexit category is commercial contracts and the impact that Brexit has had on existing contracts and the terms. Now, if you are trading internationally, you'll probably find that you've got references to the EU within your contracts. Now, there's a lack of clarity following Brexit as to whether or not that includes or excludes Brexit. Whether it includes or excludes the UK. Now, this impacts particularly on types of agreements such as agency, distribution, franchising, and licensing. So that's the first thing to check, is whether you need to adjust and redefine the definition of the EU. The next big issue is governing law and jurisdiction. Most contracts state which law should apply when considering disputes in relation to it, and also then go on to say which courts and which countries' courts have jurisdiction in determining any disputes. Now, that may need to change following Brexit, and it certainly needs to be explicitly stated, because you really don't want to be trying to enforce UK judgments in the EU if you can help it. Tariffs and exchange rates are another issue. Tariffs we've briefly spoken about. Exchange rates may become an issue because of the fluctuations, and that might be something that you want to relook at in commercial terms. Nelu spoke briefly about the movement of people and people issues, and if you're a service industry, then the lack of freedom of movement post-Brexit may be an issue for you. And I've already touched upon GDPR. So what you really need to be doing at this point is to look at the key contracts that you have in place where there is a European element to them, and just work out whether there are any issues in them that need to be addressed, and to redraft those relevant terms. Next slide, please, Kay. So just finally, to end, before I hand over to Victor, I thought I'd just look briefly at where I think things are going. And I would echo what Nelu has said about agility and flexibility. Within Excello, we've been working in a dispersed model for over 10 years. So for us, the adjustment to lockdown was a very seamless one. But for a lot of people, they've now got used to the idea that flexibility can be an advantage and not result in a lack of profitability or a lack of dedication to work. And I think we're realizing that this is about working smarter, not harder now, and that these ways of working, including Zoom and so on, are going to be here to stay. And mentioning Zoom, I think we are going to see a continued increasing use of technology in our working life. And I hope that this will mean that not only is the customer experience improved and that work-life balance is improved, but this has a positive impact on wider issues such as the environment. But I think we all recognise that having been locked down for 15 months now, there's no substitute for some face-to-face interaction. And so I think although all these new ways of working are here to stay, we won't be throwing out everything from the old days. And with that, I'll hand over to Victor.
Hello. Hello. Right, my name is Victor Dorp. I'm a tax partner at Aaron Berlin Gardner, and my first slide is just coming up here. This is actually quite important. Can we go back, Kay? That's it, excellent. Now, this is quite important because VAT and customs are different. And it's important to realize they're different. They have different terminology and they do work very differently. If you come across the word tariff, that's all likely to be customs. If you talk about duty free and a lot of it's all about duty and customs and VAT are, as I said, completely separate. And that's important to bear in mind throughout the talk. Okay, next slide, please, Kate. Right, here we are. This is us. We are an island, it says here, and rightly so. To misquote Charles Dickens, Europe is another country. They do things differently there. We used to be the same, at least what people say is as if this was a historically long-standing thing. It's not. We've actually only really been part of a single market since 1993. And if you were in business before then, the new system is like the old system, because that's how it is. Europe is a different place. It's another country. We're looking at VAT from a UK point of view with its own set of laws. In fact, virtually every country in Europe, although they're supposed to have the same VAT laws, they're all actually very slightly different. And you'd be wrong to think that because they do things one way in France, they're going to do the same in Germany or Italy. So they are different countries. The only thing that's important about Europe as a whole is that the customs border goes all the way around it. It is within that European area, it's tariff-free. We are now outside that. We are non-EU. We are different, and we have our own sets of laws. We've got Northern Ireland up there, which is a bit of a special case because of what the Brexit agreement did. But we are completely separate things. So let's move on to the next slide, please. So what happened in January 21 when we left was we stopped being part of the EU and we had our own VAT. We don't have a completely different regime. The VAT regime didn't really change at all. It's just that all the rules about things moving inside the EU no longer apply to us because we weren't inside the EU and we were trading with the EU, this separate foreign country. The EU and all its bits really are not part of us. They're no more part of us than is America, Canada, Australia, Japan, or any other country we might do business with. When we send goods from the UK to Europe, they cross a border when they go into Europe, and they are an export for us. And the export rules, there would be normal zero rating. It's a shame that we've lost the VAT-free shopping that non-UK people could use, which was exporting their own goods overseas and getting zero rate. You could do your duty-free shopping at Harrods or whatever. You could not pay any VAT, or you get it back at customs. The retail export scheme, but that is gone now. And so if you are a non-resident or foreigner coming to the UK and you wish to buy goods and you wish to not pay VAT, you have to have them sent overseas. You can't take them with you if you want your VAT, if you want it to be treated as a zero-rated export from the UK. So there's Europe. There's this border all the way around Europe. And whenever anything goes across that border, there is a VAT and a customs consequence. So let's look at customs tariff-free trade deal. This is what happened. The deal was no customs as long as the origin rules are complied with. Now, the origin rules are, as was explained, very difficult. But the theory is that goods can move in and out of Europe and there is no customs duty. Now, it doesn't mean there's no VAT. It means there's no customs duty. Right, next slide, please. So when things move into Europe, they're crossing a border, but it's not an internal border. It's now an external border, and whether the goods go into Holland or France or Spain or fly into Germany or Italy, it doesn't really matter. They're moving into that nice EU area. And the rules over there, nothing to do with us, because as far as we're concerned, it's just a zero-rated movement of goods from us, the UK, to them over there. Everything else is down to them. So you have to know a bit about how they're going to treat the goods coming into Europe. And they're going to say, as soon as goods come into our territory, whatever that is, if it's in France, there'll be French consequences. If it's Belgium, there's Belgian consequences. And VAT will be due there on the importation of the goods. That's how it works across borders. Just as if we sent goods to Canada, as soon as they hit the Canadian border, something would happen. Canadian customs would say, there's this to pay, there's that to pay. A lot of countries have VAT. Most of them call it goods and services tax, but the principle is the same. Europe is just another country. as we're concerned from an export point of view. Right, next slide, please. What you can do coming into the UK, and I'm only talking about coming into the UK because countries are different, is when the goods come into the UK, that's an import, they cross the UK border and the customs officer puts his hand up and say, halt, you've got things to pay. You may have to pay customs duty, but not if it's from the EU and the origin principle is satisfied. But if goods are coming in from anywhere else in the world, you'd have to look up the customs code and all that sort of stuff, work out whether there is any customs duty. Then you do the VAT. Now, normally when goods come into the country, VAT is due. If you ordered something from America and it arrived, then years and years ago, and I remember this myself, I had to go down to Southampton docks and pay the VAT and customs duty to collect the item that I'd ordered from America, and that was 40 years ago. But that's just coming into the country. But you, instead of going down there and paying VAT every time something crosses the border, which would be hopeless, you can apply for postponed accounting. And if you get all your ducks in a row on this and it's not difficult, then no VAT is actually chargeable to you if you're a business. It's just put to your account and you'll settle it on the next accounting day, so to speak, which will be next month. So that allows you for goods to come into the UK and the VAT piles up in your account and you pay the VAT on import duty in the same way that you'd pay VAT on any other VAT that you owe. You recover it at the same time in your VAT return. So it shouldn't actually cost, if you're fully VAT recoverable business, it shouldn't actually cost you any cash flow in using this. In fact, it makes the fact that there is no effect on your cash flow by using postponed accounting. So postponed accounting is good, but you need numbers. You need what's called an EORI number to import into the UK and to do postponed accounting. So you need to get some paperwork sorted out. It's a bit of a pain, but it's really good. Then that's goods. Goods go export to Europe or export anywhere else in the world, and goods coming into the UK are imports. Exports to the EU, really, people have made it is a huge fuss. If you've only exported to Europe, if you've only sold goods to Europe in the past, then yes, it's a bit of a problem because you don't know any different. But if you've sold goods to other countries, you'll be familiar with the export regime. You'll be familiar with the concept of problems at the other end of getting goods through customs. We've now just added the EU into another block of countries in respect of which when we send goods over there, there will be formalities at customs. But those just goods, services have different VAT rules. And one little strange thing that happened is on the 1st of January, because we left the EU, professional services, technical, intangible, and all those sorts of things, to EU customers that are not businesses, i.e. what we call business to consumer, B2C, those services are not chargeable to VAT in the UK, whereas last year they were, because within the EU, you have to charge VAT to maintain a level playing field. Next slide, please. It's always been the case within the EU that if you incurred VAT in France or Germany or anywhere else, you could make an internal claim to recover that French or German VAT, but you have to apply to the various countries. Now we're out of the EU, we can't use that system, but there's another system for third countries, non-EU countries, to recover VAT within the EU. So it's just sort of change of form, really. It's still possible to recover foreign VAT, EU VAT for us, in the same way that anyone else in the world can recover UK VAT from us under this sort of claim. Okay, slide please. Financial services. Oh, this is a bit of a nightmare, really. What am I going to say about financial services? All I can say is that we know because EU is now different, we apply the same rules of financial services to transactions with EU customers as we would do anywhere else in the world. Remember, the EU is utterly separate from us. They are now a foreign country just as much as I said, Canada or Australia or Japan or anywhere else. So the exemptions and the methods that we would use for trading with them and dealing with VAT are the same as we would now use to deal with Europe. Next slide, please. There was a thing called MOS, the mini one-stop shop, which applied to electronic services. And this said, look, if you've got a place of supply in Europe somewhere, then rather than have to register for VAT in all these different countries where you've got a place of supply, you can just fill in one VAT return for the whole of Europe if it's within a certain range of services, telecoms, broadcasting, and electronically supplied services to private individuals. And that was a good idea. It's called a mini one-stop shop because it was very limited in the type of supply it did. That's being expanded from 1st of July to OS. We lose the M. Instead of being a mini one-stop shop, it becomes a one-stop shop. Next slide, please. It becomes a one-stop shop and it applies to all e-commerce with Europe. So you can, OS will apply to e-commerce. The whole distance selling thing, if you were used to that, that went when we left the EU. The EU is revamping itself on the 1st of July with this one-stop shop. It depends on the value of the supplies that you're doing, but you can do a one VAT return for the whole of Europe for an increased range of services, which may be very helpful to you rather than charging VAT and accounting for it in lots of different EU jurisdictions. Next slide, please. Right, some EU countries, not all of them, require that if you've got VAT due there, you have to appoint a fiscal representative, which can be quite expensive. The UK doesn't, so that's quite good. But just to let you know that not all states, not all EU countries are the same. Some require fiscal representation, some don't. If you're going to do a one-stop shop type of VAT return, you will need to consider which country you're putting it in. If that country requires you to have a representation, then that's what you've got to do. But not all countries do. Often best to choose one that doesn't require representation. It saves time, effort, and a lot of money, because fiscal representatives are normally personally liable, and they don't like that, and they charge accordingly. Next slide, please. Oh, got to the summary, and God for that. Right. In summary, what I'm going to say to you again is that the EU is a separate country, and that anything that crosses a border either into the EU or out of the EU into the UK will cause a VAT consequence. And you need to know what that consequence is. You need to get the paperwork sorted out. If you're used to exporting to other countries, an export from the UK to Europe won't actually hurt your brain very much. You already know the roads. It'll just be an inconvenience, which was not there before, and an extra load of hassle and an extra load of registrations and so on. But if you've never done anything other than export to Europe, it will be a huge change. You've got changes in the place of supply of services simply because we don't have intra-EU supplies anymore. We are selling services to this separate thing called the EU. And if it causes you to register there in a particular country, that's what you've got to do. If you can use OS from the 1st of July, then so much the better. There are lots of different rules coming into Europe on the 1st of July. It is not without its complications. Next slide, please. Oh, how about that? That's a very whistle-stop tour of what happened on the 1st of January and what's happening on the 1st of July with VAT, exports, and imports. And those are the words we now use. The old terminology the ones from 1993 anyway, of acquisition and dispatch. That's all gone now. We do imports and exports. Exports are largely zero rated, and imports, VAT is due when goods come into the country, but postponed accounting should mean that it shouldn't hurt you financially apart from the administration. That's the end of my talk. I hope that was of interest, but it's not a simple subject, I'm afraid, and there's a lot of paperwork that goes with it.
Very good. Thank you, Victor, for an interesting and informative talk, and also very big thank you for Nelu and Vanessa for presenting this morning. Very, very interesting. As time is running against us slightly, can I please ask you to send any questions you may have with your feedback forms, and we'll get, and our speakers will get back to you during the next couple of days. Feedback forms really important to us. Be very grateful if you could complete them, send them back to us, and as I say, if there's any questions, include them on the feedback forms. Once again, a plug for our 9th July webinar, which will be everything you've ever wanted to know about cryptocurrencies. We're expecting lots and lots of people on that. That will be a good one, another good one. Again, thank you very much, everyone, for joining us. Thank you for our speakers this morning, and have a great day. Thank you.